Hey, what is going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and today's video is going to be awesome. We're going to be talking about an article that I just read from MarketWatch where 3 economists talk about the decline in competition in the housing market. So they are stating that the housing market is going to shift, and of course they are citing reasons like rising interest rates along with rising home prices. So we are going to go ahead and dig into that article and look at all of the details. Now, if you are new to the channel, would you please consider hitting that like button, hitting that subscribe button right there, and please consider commenting. The comments really help me learn and grow, as well as help others learn and grow. Without further ado, let's jump right to that article. All right, so up on the screen, I have the article here from MarketWatch. I will link to it in the show notes, but it says the market is shifting. Here's exactly when 3 economists predict the competition in the housing market will decline. So now I've already read through this article. I've highlighted some of the key points, but it says that the 30-year fixed mortgage rates have climbed from about 3.5% earlier this year, somewhere in and around January, to upwards of 5.6%. And the pros say that they may go higher. So they are anticipating that rates are going to go higher from here. Ultimately, time will tell. We will see. Now it says that home prices too have made a steady climb upwards. They have grown about 20% from March of last year to March of 2022 this year, and that's according to CoreLogic. Now, the article goes on to say that that news, no doubt, is met with a groan among aspiring home buyers, but we do have some good news for you here. There are signs that the competition in the housing market may be cooling off. Now, as we continue down the article, you can see that Redfin reports that for the first time in 6 months, home buyer competition actually dropped off slightly in March of 2022. Now, anecdotally, I've actually seen that here locally in the Northern California housing market. Now, it says here that 65% of the homes actually sold by Redfin agents face competition or multiple offers. Now, that is actually down from 67% in February. That's still a large amount of homes that are selling at or above the list price or receiving multiple offers. Moving on, according to the deputy chief economist at Redfin, Taylor Marr actually cites multiple reasons for the change, including the rising interest rates, which we just talked about. They're now hovering at about 5.6%. Talks about the Federal Reserve's policy to reduce inflation. Specifically, he's referring to the increasing of the federal funds rate. We've seen 2 rate increases this year, one at 0.25%, one at 0.5%, putting us at about 0.75%. Baby boomers staying in their house rather than moving into retirement communities. We are starting to see this more and more, especially with folks who maybe are on fixed incomes and can't afford the care in these retirement communities. They're staying in their home longer. Some of them have record amounts of equity. They're even turning to reverse mortgages if they still owe money on the property and don't have enough disposable income to maintain their lifestyle. And then, of course, the conflict in Ukraine. He goes on to say that homes are still selling over ask price, but the market is shifting. When you change the thermostat, it takes time for it to cool down. So this is something that I believe is actually true. Real estate does move, but it tends to move slower than other asset classes. Stocks, as an example, you could see big increases or decreases in a stock price, but homes typically stay relatively stable. At least they move a little slower, and they always do it on a lag. So this rise in interest rates may be tapering off the market a little bit. We may start to see some price reductions. In fact, we already are, but it's going to happen very, very slowly because, as they say, sellers are generally looking out the rearview mirror while buyers are looking out the windshield. And that is something that Jason Hartman says. If you haven't checked out his channel, you really should. He is a real estate expert. Now moving on through this article, the chief economist at the National Association of Realtors, Lawrence Young, actually says that the combination of rising interest rates, rising home prices will push some would-be buyers out of the market, which may result in reduced competition after the summer buying season is over. So Lawrence Young seems like he's on about the exact same page, thinks that competition is going to go down, but at the moment he's thinking that we have not seen the reduction in prices yet. We're still seeing increases in prices, maybe on a national level, and buyers are just kind of dealing with these higher interest rates. Now, after the summer season, which is generally your peak in sales activity, then we may start to see a little bit of cooling there. At least that's what I'm gathering from what he mentions in this article. Now, Taylor Marr agrees that by the end of the summer, there will be lower competition among buyers on listings, as well as more housing on the market. He warns, however, that certain areas that have become hot migration destinations, those are cities such as Tampa, Phoenix, Nashville, Atlanta, they may continue to see high rates of competitions on listings. There are still a lot of people moving to these places, even in the face of really high interest rates. I think this is really funny because he's saying that it is in the face of really high interest rates. Historically speaking, a 5.5% interest rate is not high. Now, 5.5% is high compared to what we saw just last year, hovering in the high 2s and low 3% range. But historically speaking, this is not high. I mean, I think that maybe inflation got out of hand a little bit. I think that the housing market got carried away a little bit. And then now interest rates are rising, and that is just starting to cool the temperature of things down. So just wrapping up the article, it says that MarketWatch actually recently reported that after talking to 5 economists, that it is unlikely home prices will fall significantly. They state that home prices will keep going up because there aren't enough houses available to meet demand. But the combination of rising home prices and elevated mortgage rates means that fewer people will be able to afford to buy. So they're saying that because the supply side, because the inventory is so low, that it is not going to impact housing prices, or at least they're not going to fall. They're saying that we will not see a deflationary environment in real estate. But it is possible, based on some of the things that they cited here, that we may see disinflation, meaning we won't see price appreciation at the levels we saw over the prior couple of years. Maybe they just appreciate or sort of flatline. And then the last key point in this article, it says that even though economists predict that interest rates will go up, it doesn't mean that buyers should force themselves into a bidding war just because they're panicked about interest rates. If you find a unit that is right for you and you know it's a place you're going to stay for an extended period of time, then you should move forward. All right, so I just want to wrap up on a couple of key points here. I do agree with some of the things that they're saying, some of the things I don't necessarily agree with. I know we have a tight supply of inventory, but I think I fall right in the camp where I think prices actually could come down in nominal terms just a little bit because we're already starting to see an increased level of inventory. I think the seller psychology is that they want to go ahead and list the property to try to command top dollar before prices go down. Now, if we're still sitting at about a month and a half worth of inventory nationally, then, we'd have to see hundreds of thousands of homes come on the market in order to really cool things down at any drastic level. But I do think that all real estate is local. We could see some cooling or price reductions in certain areas, whereas other areas that are maybe impacted by heavy migration maybe they see little to no price reduction at all. The other thing is interest rates. I do absolutely think that they can go higher from here. I think that's a possibility. In fact, maybe even it's a high probability that they will, but I think it's only short term because what's going to happen is there'll be no demand for mortgages at the higher rate. And if a lot of banks rely on mortgages as a profit center, but there's no demand, which means that they can't lend out any money, they can't produce those levels of profit, they're likely going to have to figure out a way to reduce mortgage rates to start lending again. And then the last thing that I want to say is that I think a temperature change in this market is probably going to be welcomed for most buyers. I mean, if you are a real estate professional, a mortgage lender, a home buyer, any one of those, you've probably been frustrated in the market over the last couple of years because it has been so competitive. You've had to get so aggressive with your offering price, the offering terms. It's been very hard to secure a deal and participate in the market, especially those who are first-time home buyers who maybe are not rolling a large amount of equity from one property to another, or maybe they don't have a huge amount of money to put down on a property. So I think that even though the cost to borrow has gone up a little bit, it means that home ownership is going to be a little bit more expensive. The fact that it'll cool things down might be welcomed for many people. Now you can be a little bit more selective. You can take your time. You can shop a little bit more. You can make sure that you're buying the right house, the right location, and make sure that it has all the amenities and features that you're actually looking for, and you can do so without having to compete with maybe 10, 15 other buyers. So anyway, that is all that I have for you here today. What did you think of this article? What do you think is going on in the housing market? Leave your comments below. Do you think we're in a bubble? Do you think home prices are going to crash? We really want to hear from you. And if you haven't done so already, please consider liking and subscribing, and we'll see you on the next video.